Hello, everyone, and welcome to the Western Australia panel hosted by Six. I know it's evening for some of you and morning for others, so I really appreciate you all tuning in to watch. We are joined today with the leaders of 3 mining and exploration companies working out of Western Australia. I am pleased to introduce you to Justin Brown, Managing Director of E25, Tamara Brown, Interim CEO and Director of Superior Gold, and Oliver Turner, Executive Vice President, Corporate Development at Karora Resources. In this discussion, we will explore what mining in Western Australia has to offer for each of the panelists' respective companies. And as a reminder, you can submit your questions at any time on the Q&A panel on the right-hand side of the screen, and we'll get to them after the discussion. And as always, this summit is being recorded and will be available to watch afterwards on six.com. So thank you all for joining me today. I really look forward to getting into the discussion. But just to kick things off, Justin, could you please introduce yourself and your company and take a few minutes to describe what you think your company's strong points are?
Yeah, sure. Thanks, Dasha. So we're developing a manganese project in Western Australia located just south of the town of Newman. We're in the exciting phase of delivering the first stage of construction of that project, which is just commissioned about 3 weeks ago. So we're commencing production of manganese concentrate, which will go out through the Utah Point facility at Port Hedland to our offtake partners in Southeast Asia. So look, we have an exciting future ahead. We've got, this is a stage 1 of a multi-stage development strategy we have for the project, which will culminate in the production of high purity manganese sulfate for lithium-ion batteries. So we've got a exciting 5 years or so ahead of us, and we're working pretty hard to achieve the milestones that we've set on what's a pretty aggressive development timeline for our project.
Great, thank you. Welcome. And Tamara.
Thanks, Dasha, and good morning, everyone. Thanks for joining us. So I'm the interim CEO and a director of Superior, as Dasha said. I'm an engineer out of Curtin in Western Australia, actually. So I've been in the mining industry for close to 30 years now and have ended up in Canada. And so Superior Gold is a Toronto Stock Exchange venture-listed gold producer. We own 100% of the Plutonic gold operations, which are located right in the heart of Western Australia, up near Meekatharra. And so Plutonic gold operations, for those that don't know, it's an underground mine and some open pit projects that used to be owned by Barrick and then more recently Northern Star. So this is a big gold deposit that has produced in and around 6 million ounces of gold, and it's been in continuous production since 1990. So it's a big historic gold mine, one of WA's largest historic gold productions. So some of our investment highlights, we always note that one of our top investment highlights is that we are located in Western Australia, which we believe is the top mining jurisdiction in the world. And we own a big operating gold mine with all the associated infrastructure around it. We also have a clear plan in which to grow the current production level, both with increases in underground and open pit production, all utilising our existing infrastructure. And then obviously also the exploration upside is a big part of the Plutonic story. And so there's a lot of drill rigs turning there, and we're very excited about what the future holds. So that's a little summary, Dash.
Great, thank you. I look forward to hearing more throughout the discussion. And Oliver, welcome.
Yeah, thank you very much. So Karora Resources are also domiciled in Western Australia, where we have 2 producing assets in Beta Hunt and Higginsville, located about 65 or 70 kilometers south of Kalgoorlie. So right in that Kalgoorlie belt, 100 million ounces of historical production from that part of Western Australia. So certainly a good place to be. Currently have 2.5 million ounces in resource, another 1.3 million ounces in reserve. Beta Hunt's an underground operation, and Higginsville is a series of open pits with 2 additional underground operations we'll be bringing on shortly. We produce about 105 to 115,000 ounces a year, and we've steadily reduced our cost profile over the last 7 quarters. We're around about $1,000 an ounce in AISC, and we have aggressive plans to grow the production profile beyond there. We'll be updating the market with our growth plan here in the coming months to expand much further beyond where we are today. And we exited the first quarter with a very strong cash balance, just under $80 million on the balance sheet. So we're well positioned to execute on that growth plan.
Sounds great. All right. Well, thank you all for joining us. I want to dive a little deeper into what Western Australia is like and what are the benefits of operating there. Maybe if you know a bit about the history of the jurisdiction and what makes it so exciting to each of your companies. Starting with you, Justin.
Yeah, look, I think Western Australia is regarded, as Tamara indicated, as pretty much a tier 1 jurisdiction for mining. It's been we've been mining here for a very, very long time. Well-established regulatory environment for mining, pro-development. So it's whilst there are sort of reasonably stringent regulatory hurdles to get through, you can get projects up and running here. And that's sort of backed with, I guess, a pretty robust heritage and native title framework that we work within as well. And so I think the real advantage, and I guess from the capital markets point of view, it's a very attractive jurisdiction as well, because of security of tenure, strong ESG credentials in terms of the way projects are developed here, which is becoming increasingly important to investors as time goes on. So I think, look, I think on the Fraser Institute as one example, we fluctuate a little bit in terms of exactly where we land year by year, but we're always in the top 5 or so, and that's reflective of what I think is a pretty strong pedigree of mining development and responsible mining development, more importantly.
Okay, thank you. Tamara, anything to add?
Yeah, sure. It's a great summary, Justin. And one thing I always start with, because for those who hold assets in other jurisdictions, I've spent a lot of time working in Africa and Mexico and other places. And so WA is a very safe place to be working. People want to live there. It's a highly experienced workforce in Western Australia. And so you've not only got people wanting to live and work there, you've got strong established infrastructure and supply chains that have been tested, as Justin said, over many years. And with respect to gold mining, WA has a very significant history. Obviously, back in the 1800s, there was the gold rush, and then, very quickly, WA became one of the largest producers of gold in the world. So for us as a gold producer, people do think of gold production when they think of Western Australia. Obviously, we've got the Perth Mint located in WA, which is one of the world's largest gold refiners. And so there are many advantages to having an operation operating here. And I think we've seen that quite clearly in the last year, where we've been able to operate effectively uninterrupted with a global pandemic going on. And so many of our Canadian and other North American peers have been significantly impacted by this pandemic. So I think that WA certainly rose to the top in the last year as far as a good place to be doing business and a good place to be owning and operating a gold mine.
Right, absolutely. Yeah, I wanted to get more into detail about COVID and how that affected each of you in a bit. But Oliver, do you have anything to add on operating in Western Australia?
Yeah, absolutely. So just on the back of Tamara's comments there with respect to the Western Australian jurisdiction, one of the interesting things is the WA government's actually exiting this year with a surplus due to the mining royalty income that they did have. So they are very cognizant of the fact that mining is critical to not only WA's economy, but to the economy as a nation. So they've been very supportive with helping to move projects forward and making sure that there is support there for mining companies. So from that perspective, great place to operate. If we focus more locally in terms of where we are in Kalgoorlie, well over 100 years of mining history there, very experienced labor force, similar to what Tamara said, but also just technically fantastic miners. They're able to mine deposits that, quite honestly, are much lower grade than we see in other parts of the world and mine them at very strong profits. So technically very gifted, and a very supportive government makes it a great place to be.
Right. Wow. Great, thank you. So we've highlighted some of the benefits of operating in Western Australia, and I was just wondering, what are some of the challenges that you face when operating in Western Australia, and how have your companies overcome these obstacles? I'm going to continue the circle and go with Justin again.
Yeah, sure. Look, I think the bar is fairly high here. I mean, you have to do it well, and you have to do it responsibly. And there are, you have to do it cognizant of your environmental heritage, native title obligations, and you can't, it's not okay to sort of be destructive in the way you approach mining here. So I think that can be frustrating at times, because sometimes it seems like the regulations are perhaps a little bit overly onerous. But I think what it means is that ultimately we have a very well respected mining industry here that sort of stands above its peers around the world in terms of environmental responsibility. So yes, can be challenging, but certainly very much can be done. I mean, I guess a testament to that is the fact that we went from a pre-feasibility study to commissioning of our first processing plant in about 10 months, which took a heck of a lot of work from a really skilled team of people. But you can fast track projects here as long as you're cognizant of the regulatory framework that you need to operate within. So yeah, look, it's the bar is high, but you can get there if you put the effort in.
And I'd say really that the only challenge that I can ever come up with is because WA is so mineral rich, there is a lot of competition for people and services. And so we've certainly seen that with the COVID border lockdowns, where, you know, around a third of WA's mining labour force would come from eastern states, and with the quarantine periods, that's been more challenging. So I would say that that's probably for us been one of the challenges, because we're sitting there in WA, and right now it's sort of an island within an island, as these outbreaks can happen in different parts of the country. So we're seeing, you know, with the confluence of high iron ore prices with high gold prices, is that the labour market is tight. And I think that's great for Australians and Western Australians living there. And it can be challenging for mining companies. And so they have to be very clear with the kind of retention and other HR strategies that they have to attract the right talent.
Right. Oliver, what are your thoughts?
Yeah, similar to what Tamara said, you know, the challenges with how excellent the response has been to COVID-19. Western Australia has done a fantastic job of containing it and responding very, very quickly. I think one of the best responses in the world. But of course, with much of your labor force coming from cross-border, that has been challenging. We've also noticed some tightening on the engineering work side of things. So local consultants, Perth-based consultants, getting engineering work done on projects. They have a lot of work to do. Unsurprisingly, all mining companies had great years last year, so there's a lot of study work that people want to get done. So a little bit of shortage on the engineering and technical side of things. But I think, you know, overall we've managed it very well. To Tamara's point as well, in terms of, you know, the HR and retention things, we adjusted quite a few things early on last year that provided Karora with a very strong brand. So we've retained the vast majority of our people there, despite very tempting iron ore projects with high salaries poaching a lot of the gold industry. It's been good for us. So.
Oh. Yeah, I want to hear more about how COVID-19 has affected your company's ability to develop projects in Western Australia, and how has the response generally been handled in Australia? I know you said they were very strict and they kind of contained it, but has that response led to any advantages or disadvantages for Western Australian mining operations? And Oliver, you touched on it, so I might go back to you to start.
Yeah, sure. So we had to adapt fairly quickly right at the beginning of all this. We immediately put medical staff on site. We also changed the way that we brought our workforce in. We chartered flights directly to our operations to make sure that personnel were coming directly to our site rather than going through Kalgoorlie. We also changed rosters and timing of working, so it would help out people getting back and forth from other parts in Western Australia. So that response has been very successful. With respect to new projects, look, I think the restrictions are affecting the labor departments as well. So we have seen a bit of a slowdown in approvals. Simply put, there's just not as many people to work through the applications that they usually get. So we have noticed that a little bit. And then finally, on the drilling side, we had about 5 months last year where some third-party drills were parked, primarily due to precautions. If you weren't mining gold, you weren't on our site during that period of time. So some delays there and delays in assays coming back. But overall, we've navigated it very well.
Great, thank you. Oh, how about for Superior Gold tomorrow?
Yeah, so Dasha, we have a fly-in, fly-out operation from Perth, and so we are able to control our people flow very well. So very quickly, when COVID happened in late February, early March, we immediately put in place an infectious disease management plan. So that included things like pre-flight screening, temperature checks, self-isolation facilities on site. Very happy to say we've had no incidences of COVID either at site or in any of our corporate facilities. But I think that being in Western Australia, being in Australia has been a significant advantage with respect to that, because the government has done such a great job of locking down our borders there. So our travel to site was very controlled. We also went to a 2-on, 2-off roster just to limit the amount of people moving and the chance for virus transmission. We've had very little impacts with respect to our operations, so we have had no shutdown periods, but we have a zero tolerance policy with respect to our local Indigenous communities, simply because they're so remotely located. So that has put a slight delay on things like some heritage surveys associated with some of our new projects. but everybody in and around both our operation and in our region are all aligned with this. And so I think that working together, we can help to prevent any kind of a spread, no matter what, really. Like, because Perth has had a couple of small outbreaks in Perth. And so with our employees flying from Perth, we've had to be very vigilant with respect to that travel. Right.
Well, it's great that you haven't had any cases. But I imagine it has delayed, turnaround times. And I guess you were saying with the First Nations, it's taking longer to get certain approvals and stuff. How about for you, Justin? What is it like with Element 25?
Yeah, look, very similar comments to Oliver and Tamara, to be honest with you. We've had temperature checks and obviously heightened protocols around infectious diseases and managing people movements in a proactive way. I think just to sort of couple that with the fact that the government's been incredibly proactive in being, very careful about sort of transmission of the virus, but also recognising that the mining industry is a key part of the economy here. And as I think Oliver touched on earlier, that's meant there's been some very strong royalty flows because we've managed to keep the industry going. So from an economic point of view, I think WA's done very, very well, and the government deserves some credit for that, as does the industry, who have reacted very proactively as well with roster management and minimising people movements while keeping the industry going. So look, it's been pretty much a win-win. I mean, the negative that I think the other guys touched on was the labour markets are very tight, and that's to some extent a result of that the hard borders that the government's kind of adopted. But at the same time, it's a double-edged sword because that's what's kind of kept us safe as well. So what the perfect balance is hard to say, but we've done it right.
Right, absolutely. Oh, it sounds like it. All right, well, thank you so much. So my last question for all of you is just, what catalysts is your company working towards in the coming year? What do we have to look forward to? And what can investors leave today and take away from this discussion? And I'm going to start with you, Tamara, just to mix it up.
Sure, thanks, Sasha. So look, Superior Gold's at a pretty important point in its life cycle. We had a number of changes that we brought into effect last year. Operational changes, geological changes. And so we've seen the last 3 or 4 quarters now, I've seen an improvement in the amount of gold and the cost at which we're producing, which is very exciting. So we expect to see some ongoing operational improvements coming out of the underground gold mine. In addition to that, we'll be bringing online open pit mining. And this is what Plutonic was always designed for. It's a big mill and a big operation here, because the original Plutonic mine wasn't open pit, and then they later went to the underground. So some of the things that we're looking forward to are bringing out some of the geological improvements that we're seeing here. We're seeing that with improvements in technology, we're able to better understand the ore body that we own, and that's simply by increasing the amount of data that we're using from which we interpret and estimate the ore body and the continuation of that mineralization. So that's making a lot of impact for us, both on an operational and also on an exploration front. So we now have exploration drill rigs turning completely dedicated to opening up this gold deposit, both on the western and on the northern front. Also, on a financial basis, in the next month, we'll be fully repaying a gold loan that we had outstanding, and that will result in the company being effectively debt-free going forward and generating an increasing amount of free cash flow, which I think is going to be important for the investment community to recognise and understand. And so the next thing is the open pit project. So we have a couple of small open pit projects coming online, but beyond that, we have a bigger project, which is a pushback of that main Plutonic pit, where we'll be adding 60,000 ounces a year for 6 years from that project. So we're very excited to be advancing that in the next year, completing the necessary heritage surveys and getting that project permitted. So I think that's an exciting future for Plutonic, where we have 2 parts of the business, both the underground and the open pit, and we're going to be advancing them both at a steady rate.
That's great, thank you. And Justin, what are you looking towards?
Yeah, so I guess we're a little bit earlier in the journey to the other 2 attendees this morning, in that we've just commissioned our first plant, or first stage of our process plant. So it's really for us about ramping up, getting to nameplate, obviously making sure we achieve the margins that we set out to achieve. Fortunately, we're fully funded, having just done a substantial capital raising, so we're debt free as well. all funded through equity. And we've also got sufficient capital to develop a stage 2 expansion case for the project as well, which will increase the volumes of concentrate production from our manganese project. It's a very large resource, so it has a lot of potential to grow quite substantially in coming years. And as I touched on in the first round of questions, we're looking to move into the downstream processing side of things as well. So we've got a well-advanced flow sheet developed to leach our manganese into a high-purity battery-grade manganese sulfate product, and that will be the focus of feasibility study work over the next 6 to 12 months. So very, very busy, Dasha, to be honest, but fully funded and a great team. Sounds
like it. All right. Well, last but not least, Oliver, what upcoming catalyst is Karora working towards?
Yeah, so lots in the chamber for this year. First and foremost, obviously, we're pretty close to the end of the second quarter here. We're going to be delivering our growth plan to the market. So that'll be across all of our assets here. We're quite excited to deliver a multi-year guidance to the market and how we plan to execute on that over the next several years. We're already kicking off on the first phase of our mill expansion. In fact, we're ahead of schedule where we increased the mill. We're going to be increasing the mill by 15%, but we're up to 1.5 million tons per annum right now. We were at 1.4 and we're headed towards 1.6. So we should be exiting the year at that rate, which will be excellent. Lots of drilling going on across our properties. One of the benefits of uncapping these properties with royalty removals last year was we can spend a lot more with respect to exploration. So we're spending $20 million this year. Prior owners, just for context, were spending about $300,000 a year. So lots of news flow coming through there. At Beta Hunt, we continue to drill the Larkin zone, which is a higher grade zone, which we expect to be mining later this year, which will essentially be all profit, given we generate good free cash flow at the grades we're mining currently. At Spargos, which is our high grade open pit project, we'll be bringing that online by mid this year. That'll contribute to higher grades in the second half of the year. And then, of course, at Higginsville Central, we're bringing on not one, but 2 underground mines by mid this year. We've started the box cut for Aquarius, which is a 19-gram resource. We'll be mining that in the third and fourth quarter. And then, of course, with Two Boys, restarting the old underground mine there, that'll contribute to higher grades as well. So continued operational delivery, lots of drilling, growth plan to roll out, of course, resource and reserve updates at the end of the year, which will include Larkin for the first time. And then last but not least, we've been hitting some excellent nickel grades at our Beta Hunt operation, which will be dramatically reducing our all-in sustaining costs with strong byproduct credits. So continued strong free cash flow generation from quarter to quarter.
All right, lots going on for each of your companies. So thank you so much. We're going to jump right now into the live Q&A. So if you are tuning in and have a question, please submit it now. But we've got a bunch here already. So the first question is from Lachlan. With the ramp up in mining activities across Western Australia, are there any ways the industry can work more collaboratively? Which I think is an interesting question. But specifically, Lachlan says, for Justin, with Firebird looking, I see that it's just, he says that is not far from Butcherbird and a short distance from the town of Newman. Do you think that there will be any collaboration or synergies there?
Look, anything's possible. I mean, certainly they're proximal to us. It remains to be seen how their sort of next round of exploration and metallurgical sort of test work goes. So I guess it's a bit early to call that, but we'll be watching with interest, and we're certainly open to conversations if there's a mutual benefit to be had, for sure, always.
Right, great. In terms of collaboration, is there anything you guys want to add, Tamara or Oliver, with other companies working in the area?
Look, from my perspective, you know, we've seen a lot of examples where you know, in Nevada, up in Canada, where, you know, you've got assets that aren't just logically owned. You know, there's a lot of benefit for the shareholder community, for companies to get together and for logical owners to own those assets in their vicinity, rather than trucks passing mills on highways and that kind of thing. So I definitely think that there can always be more collaboration between mining companies, no matter what they're actually mining, because there's always business to be done with neighbours.
Great, thank you. So Chris is asking specifically for Tamara and Oliver, can you speak to how you view mill capacity issues and how you plan to resolve them?
Oliver, do you want to start?
Yeah, sure. Yeah. So Our mill capacity issue is around the fact that we have more ore than we could put through our mill. Our mill's been at 100% capacity since we acquired Higginsville, originally at 1.4 million tons per annum. As I mentioned, we were around 1.5 today, going to 1.6 by the end of the year. So we have lots of feed. We're playing a grade prioritization game right now to try to bring some of the higher grades forward. So expect to do that in the second half. Not only that, of course, I've mentioned the growth plan continuously for many months now. So we'll be announcing a phase 2 mill expansion, which will kick off next year to materially expand that Higginsville mill to be enable us to put more ore through from all of our sources. So we'll be able to fully fill our mill no matter how large we expand it. So definitely an expansion coming in the works for lots of feed.
Great, thank you. Tamara?
And Dasha, as Chris says in his question, he's hit the nail on the head. You know, we have opposing problems. So at Platonic, we have 2 mills. We have a 1.8 million ton per annum mill and a second mill currently on care and maintenance at 1.2 million ton per annum. It's an oxide mill, the second mill. So back in Barrick's days, they were producing from this asset in and around 330,000 ounces of gold a year. Currently, Superior Gold's midpoint of its guidance is 70,000 ounces of gold. So you can understand the opportunity for us is to fully leverage our infrastructure that shareholders already own. And that's by making sure that we increase the amount of production from the underground and that we bring online these open pit projects. So for us, our work is put into the ground, so to speak, so through the drill bit and through the development of these projects. The great news we have is that the gold's there. The gold's there both on our Platonic property, on our adjacent Hermes project properties, and also in and around Platonic. So in and around 150 kilometres of the Platonic mill, Dasha, there are quite a number of assets that don't have a dedicated milling opportunity. So that kind of goes to what I said earlier, which is makes a lot of sense for these guys to be talking to us rather than for the investment community to be building another mill when there's capacity up in the northern part of the Yilgarn.
Right. Great. Thank you so much. This next question is for you, Oliver. So management and shareholders have commented on the low valuation of Karora stock outside the operation excellence, which has been excellent, says Ray, this past year. What does Karora need to do to drive share price higher to reach a proper valuation?
Yeah, thanks for the question. So there's several things obviously that we drive. Starts with the operations, so continue to deliver there. And thanks for the comment on past delivery. We think that building a track record of stable operational performance will allow us to get a lot of credit for the growth plan that we will be rolling out to the market. So delivering that to the market is definitely important. Also, obviously, we're out marketing quite frequently, doing good things like these panels with Six to get the message out there. We've had a tremendous amount of interest, not only in North America and Europe, but also in Australia. So we've been quite public about the fact that we are considering an ASX listing over the course of this year. That will be a demand-driven listing. We're not going there seeking demand. It is coming from Australian institutions. So we expect that in the multiples that Australian companies trade at compared to North American companies to capture some of that multiple. So many things we are executing on, but just continuing to add cash to the balance sheet, generating free cash flow, and getting your message out there is the best thing that you can do.
Great. Great, thank you. So this is a question for all of you. Jonathan's asking, what are you seeing in terms of cost inflation, both on operating cost and capital costs?
Go ahead.
Sure, absolutely. So for us, we're not currently putting any infrastructure in Dasha. So we're not buying steel, putting in big, high capex expense units. So what we are doing though is looking at pushing back open pits. So we're looking at more on the labor side, I would say. I haven't seen it come through to our costs yet, but I have absolutely planned for it this year. And I think that's COVID related. I do expect that when the borders go up and we've all got our vaccines and WA is able to have that inflow of eastern states workforce again, that pressure will probably alleviate. But for us at Superior, that's the cost pressure that I would expect to see, but haven't quite yet.
Yeah, I would echo that precisely for Karora. It's primarily on the labor side. Our employees, we have long-term contracts with them, but on the contracting side, there is a challenge for them to find some skilled labor on the contractor side. So it hasn't flown through to unit cost just yet. If COVID were to continue on, and let's all hope it doesn't, for another year straight with border closures, I'm sure we would see that flow through to the cost line. But to date, we haven't quite seen it, and we certainly budgeted for it last year, so we are prepared. But labor is the primary reason. When it comes to consumables, we have excellent supply agreements in place, and we haven't noticed any major increases there just yet.
Great, thank you. Justin, anything to add?
The only one I'd probably echo the comments of Oliver and Tamara, to be honest. We all hope that the borders can come down sooner rather than later, I think, to ease that labour pressure. The only other one that affects us that probably doesn't affect the other guys because they're gold companies is that in a bulk export environment, the shipping costs do bite as well, and that they are definitely pushing upwards. So that's probably the other thread that we hope eases over the next 6 to 12 months.
Sure, thank you so much. So, Justin, another question for you, actually. Are there any plans to drill some of the other tenements that Element 25 have in the portfolio? Asks Matt.
Yeah, thanks, Matt. Look, it's a tricky question. I mean, we've got 263 million tonnes in JORC resources at the moment. So we will definitely drill more at some point, but it's really probably more about conversion of inferred resources to measured indicated as we look to expand the reserve base. But there's no immediate urgency unless the geologist identifies something that is going to have a bottom line impact in terms of high grade feed or something of that nature. So always looking for things to drill, but look, it's probably the lowest on the priority list in terms of the fact that getting to nameplate, achieving our grade targets and our throughput targets are probably more pressing just now.
Okay, thank you. Question for you, Tamara. With Superior now having a drill-focused focus on exploration, what areas will exploration focus on, and what is management most excited for?
Great question, because this is what everyone gets excited about, and especially in the gold space. So we have 2 mining fronts that we're looking to open up here at Superior. So we have an extension about 1.2 kilometres long along what we call the Western Mining Front. We have quite a number of historic high-grade intercepts sitting out beyond our infrastructure, but relatively close, so it's not going to be high capital to bring it into the mine plan. And we are finding that there are these northwest trends of high-grade mineralisation extend not just through our ore body, but to the western extension. And so we're very excited to get the drill rigs turning out there. Happy to say that the last 2 sets of drill results that we've put out have been very successful. The first one in Q1, we had a 100% hit rate of significant mineralisation. So in the underground, that's absolutely what we're looking to do, so that Plutonic can then be opening up into virgin ore so that we have better productivities and larger stopes. On the surface, though, it's even more exciting because there's been no drill rig on the surface since Barrick days. So it's a long time now. The previous owner was an underground miner and they didn't have any drill rigs on surface. And so we have a situation here where most of the gold at Plutonic is found in the mineralised mafic, and that mineralised mafic outcrops in 2 places where, put simply, that's where we've mined. So we've mined at Plutonic and we've mined at Plutonic East, and the mineralised mafic extends all the way across the property, but with it just under 50 metres of cover. So now for the first time, we're going to be putting a drill rig on surface and just sequentially targeting that. So they're the 2 areas, and I'm probably equally excited about the exploration results that we look to be able to put out this year from the underground and the open pit.
Great, yeah, thank you. So our next question is for all of you. Is there interest from Australian and institutional investors for these assets? And what are the challenges for listing in Australia? Whoever wants to go can take that.
I think my general comment there would be you've seen a massive amount of interest from investors in West Australian mining projects, I think in the last 6 months at least. And I don't know what the number is, but there's been a huge amount of capital flowing into the industry to fund new projects and obviously expansion plans for existing projects. So I think the investment appetite's been extremely healthy. Listing on the ASX is very doable. I mean, it's a well-recognised resource exchange. I couldn't tell you how many exploration and mining companies are on it at the moment. One of the others may be able to, but it's certainly in the hundreds. And it's certainly an area where I think, alongside TSX, we may even do a little better. I think it's the capital flows here are slightly easier than they are perhaps in the Toronto Exchange at the moment. So very healthy.
Great. Any other thoughts?
Yeah, I would just add one bit to that. Is an excellent.
Go.
Okay. Yeah. No. So this is just one other thing. That there's a really interesting pool of capital in Australia with the superannuation funds that you have there. It's over $1.6 trillion worth of capital that is somewhat captive in Australia. So listing in Australia, there's huge appetite for anyone that's listed on the ASX 300, 200, and 100. So if you're able to get yourself onto those indexes, which we would certainly qualify if we were to list in the ASX, we expect a lot of generalist buying as well as the specialist resource funds. So definitely a very strong situation there.
Yeah, absolutely. I agree with both Justin and Oliver. There's opportunity, there's arbitrage opportunity with respect to valuation. So at any point in time, you sometimes see Australian companies trading at a higher multiple than Canadian listed or North American listed companies. Right now, that is the case. The Australian companies are sort of pipping us at the post there. You can see that with some of the regional explore codes in WA don't have any production and have very healthy trading multiples. But I would note that there's always a risk with respect to splitting up your liquidity. So for a junior company, you have to have a certain liquidity before you would contemplate a dual listing. Quite often, a dual listing will come via M&A activity. So whether you have CDIs listed in Australia along with your TSX listing. I think the advantage of being TSX listed is that we do have access to the largest capital pool in the world here in North America. And they are very educated about Australia, and they have a healthy appetite for Western Australian gold assets and resource assets in general. So I think that we do have the advantage where, even though it's a long way away, our investors are certainly very educated about WA. But I do see the opportunity for the ASX at the right time.
Great, thank you. Oliver, Dave is asking if you can please confirm that the company growth plan will be released to the market before the second quarter numbers come out.
Yep, that's our plan. We're on track.
All right, perfect. Thank you. Randy is asking, is there a limitation in milling capacity that has an effect and possible deals in the making? Anyone who
I can jump in there. I mean, I think we addressed a similar question earlier with talking with Tamara about her challenges and our challenges at and I guess opportunities for both of us really at both mining operations. And I guess with respect to the second portion of the comment, stay tuned.
Great. All right. Well, I am cognizant of time, so I'm going to leave off with one question for each of you. So Justin, can you please give us an idea as to the current progress in your project commissioning for the manganese grade, the quality of the manganese grade, and the expected date for the first commercial production and cash flow receipt?
Yeah, sure. So we've got in our timeline, we've got a 3-month ramp-up schedule. So we aim to hit nameplate within 3 months of commissioning, which was started about 4 weeks ago. We are hitting our grade spec. We're at about 70% throughput at the moment, working to ramp that up to nameplate over the coming weeks. I mean, we'd like to beat that 3-month target, but that's sort of the schedule as it stands today. So going nicely. First cargo imminent. Can't give you an exact date just yet.
Great. I love all these stay tuned answers, leaving everyone excited. For Tamara, Superior, how many drill rigs are drilling and what is the total cost per meter? Oh, I think she might be frozen, so I'll go to a question for Oliver. For Karora, your guidance calls for a 20% increase in production. Rob is asking, is this low considering your mill expansion alone is 15% and your grade improvement surely will exceed 5% production growth?
Yeah, it's a good question. Thank you, Rob. And obviously we have factored in the mill expansion into that guidance that we put out to the market. One of the things we have to be cognizant of with Higginsville is it's not just grade, it's also blend that's very important. We have a blend of harder material coming from Beta Hunt, and we also have softer material from Higginsville that must be blended there. We've done a tremendous job at the operational level. Our mill managers have done excellent work there with respect to keeping mill availability up. We're we're north of 95% on a consistent basis, as well as recoveries at 93%. And that is not just grade dependent, that is also blend dependent. So it's very important that we have the right blend going into that mill. So as we expand this mill, we need to maintain that blend. So all of that increase cannot translate into a grade increase. We do expect grades to continue to improve over the course of this year, but that's how we come up with our guidance.
Great, thank you so much. I'm going to give a moment for to see if Tamara can join back in, but there is a question from Paul asking, what is the status of possible use of ore sorters, and do you have a range of possible benefits?
Yeah, so we were conducting work last year, in fact, on ore sorters, and the state border closures that challenged a lot of companies also challenged us. The company that was conducting the work was across the state border. When those opened up, they were able to come across and conduct the necessary work, which was excellent. Unfortunately, those borders get opened and closed fairly frequently. So the first pass of results that came out of the ore sorter work was promising. We're now transitioning to a second phase. The first phase showed a dual pass approach that was required. We want to consolidate that into single pass ore sorting in order to bump up that grade from the material at Beta Hunt and truck fewer tons down to Higginsville. So when that work is complete, we'll then make a decision whether we want to proceed with the project or not. But while borders remain closed, the work remains slowed, in line with what I was talking about earlier with respect to engineering work being slowed down by all of this. But when that work is complete, we will certainly be making a decision.
Great, thank you. Tamara, this last question is for you. So how many drill rigs are drilling, and what is the total cost per meter?
Thanks, Asha. Sorry about the technical issues there. I'm not sure what happened, so thanks for waiting it out. Yeah, so look, we have 3 drill rigs in the underground right now at Platonic, and the cost per meter will depend on really the productivity of those drills. So in and around 100, sometimes up to $150 a meter. But what we want to be getting to, only one of them is fully dedicated to exploration drilling right now. And so what we're excited about is getting another underground drill rig. And then in the second half of the year, we'll have a surface drill rig dedicated to those open pit projects on surface. So that's the exciting part of the stay tuned story, as you said earlier.
Absolutely. All right. Well, thank you so much, Justin, Tamara, Oliver, for joining us today and giving us all your incredible insight. And thank you for everyone who tuned in and asked all these great questions. If you didn't get a chance to ask a question or you think of one after, feel free to reach out to us. For those of you asking, this is being recorded and will be published on 6.com afterwards. So for those of you who joined late, you'll be able to rewatch it and get all your questions answered. But thank you again, and I hope that you all attend future summits. Have a great day, Justin, and a great night for everyone else.
Yeah, thank you very much.
Thanks, Sasha.
Thanks all.